So, as expected, the new US tariffs on goods from Canada, Mexico, and China have triggered retaliatory measures from these countries. The trade war initiated by Trump is now set to hit the US economy in return. Meanwhile, the eurozone economy is showing more signs of recovery, supported by the creation of a 500 billion euro infrastructure fund. This is clarifying the prospects for a stronger euro. However, the outlook for the US dollar, which hit a 4-month low in early February, is becoming increasingly uncertain. To better understand currency trends, it's worth keeping an eye on the economic data. You're watching Traders Calendar on the March 10 and 11. The week's reports will begin with Germany's economy. The first release will be the country's trade balance data. In December, German exports hit an 8-month high, rising to 2.9%. Europe remained the main buyer while demand from the US fell by 3.5% and exports to Russia plunged by nearly 20%. Overall, Germany's exports declined by 1% last year. Trump's tariff threat could worsen the situation significantly. Note that there are no expert forecasts for Germany's export figures of industrial production. This means that the euro could react strongly to the publications. If the numbers exceed previous levels, the currency will get a boost. However, there are no high expectations for the industrial production report. In December, it dropped to a 6-month low, with the auto sector losing 10% and machinery manufacturing falling by 10.5%. January is unlikely to bring major improvements, so the report is unlikely to support the euro. On Tuesday, March 11, EU finance ministers are scheduled to meet, and the key economic reports will have a broader geographical scope. Australia will disclose its consumer sentiment data. The indicator may slide from a 0.1% to minus 0.3% in February, and this would be a negative signal for both the Australian dollar and the oil prices. Japan will publish GDP data for the fourth quarter. It looks like the country's economy is preparing to return to the top 3 global economies, a position it lost to Germany some time ago. Currently, Germany's GDP ended the year barely above zero, while in Japan the indicator could be around 2.8%. Strong figures will support the yen against the US dollar. Interestingly, the US Bureau of Labor Statistics has deviated from its usual schedule and is releasing the job openings report after the non-farm payrolls for February. The report itself reflects January's data, which is expected to decline from 6.8 million to 6.5 million. Before the publication of the key labor market data, these figures could add to the overall employment figure. However, if the indicator drops for the third straight month, it could signal a trend. A cooling US labor market may push the Fed Reserve to cut rates, weakening the greenback. Due to the United States switching to daylight saving time, the schedule for weekly oil inventory reports is shifting. The American Petroleum Institute has reported steady declines in reserves for 3 consecutive weeks. And during this period, stockpiles have dropped from over plus 9 million to nearly minus 1.5 million barrels. If the new data confirms a further supply reduction in the United States, oil prices could rise. Since some of these supplies come from Canada, this scenario seems quite realistic. Please note The time of publications is set in a GMT plus 3. The next video review of a trader's calendar will be released on a Tuesday, February 10. And now we continue to follow developments in the financial markets. Subscribe to our channel and follow news with us. See you!